Looking back at the last decade, we can all look back with a sense of awe as to the massive gains certain companies related to tech, innovation, and consumer products made. Today I'll go into why I believe precious metals and mining stocks are currently undervalued and how they could outperform other equity markets over the next decade, so stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success investing, as well as going against crowd thinking on certain areas where I think crowds get things wrong. A good example of this that I've been bringing up a lot recently is the idea that the most crucial thing you need to survive a pandemic is toilet paper. I don't know where that idea came from or how it started, but that's just where crowds went with that mentality, and obviously we can all see that that's a pretty ridiculous belief, but nevertheless it drove a lot of crowd thinking. So I like to go against funny topics like that, but also other topics that I think crowds tend to get wrong. So if you like these topics, please consider subscribing. First of all, precious metals and miners have outperformed many equity markets this year, even though the stock market has rebounded in a never before seen V-shaped recovery. We've never seen a recovery this quickly. It's always been, a second crash. Now, usually when investors are confident in a bull market, they will generally pile into stocks more than metals. And historically, metals have suffered during a true bull market. A good example of this would be from, the start of the bull market that we just ended, 2010 to 2019. It was a bad time period for metals, but it was a great time period for stocks, so it usually trades back and forth. However, many retail investors are clearly doubtful of this current bull market as to whether it can sustain itself. Now, ultimately, I don't think it can. I go through this in a lot of my previous videos. You just cannot get from 15 to 20% unemployment down to what we were at before at 3.5% unemployment. It's just a physically impossible thing to do. No amount of stimulus, no amount of cutting interest rates. Stimulus is mostly not spent when people are afraid. Corporate bailouts only encourage bad management. None of these can restore these crucial economic markers. I just mentioned unemployment, but also production, corporate debt, consumer debt, ultimately sovereign debt. None of this is improved with any of the things the Federal Reserve or the Treasury can do. So ultimately, I tend to side with the value investors who have stayed out of this fake bull market. People who say that this is the start of a new bull market, that it will run just like the last one, I completely think are wrong. The average length of a bear market is 14 months. We only saw 6 weeks back in March and late February. So this doesn't mean that the Federal Reserve and Treasury will not fight this. Believe me, they will fight this as hard as they possibly can. They've already said explicitly that they will do anything possible to avoid this type of meltdown. So I actually do think the markets have a ways to run up before it's time to throw in the towel and get out. But the next question is, during the next market cycle, when everything begins to recover, what will be the next FAANG, Facebook, Apple, Amazon, Netflix, Google equivalent sector that outperforms most other markets? And I think the answer is in precious metals and miners. Now, the reason why these metals and miners are currently undervalued and why they stand to benefit so heavily from the upcoming market cycle relies heavily on what the Fed is currently doing. They and all other central banks have promised QE infinity, debt buying infinity, buying corporate debt, previously unheard of things, negative interest rates, cutting into more negative interest rates. And they're essentially in a race to currency debasement. Who can, cause the most inflation, or not necessarily the most inflation, but who can debase their currency the fastest. Now, that might seem like a ridiculous race to be in. Who would want to debase their currency? But it's actually what has given China a big advantage in production, is that their currency has been artificially devalued against other currencies, and so it's much cheaper for labor and factories to operate there. So that's an example of why central banks around the world are effectively trying to race to currency debasement. Now, gold is limited in supply. There will never be the potential to create more gold. It can be mined, but the extent of mining is always limited as well. So reason number one for gold and silver to outperform so well upcoming is simply the debasement of other fiat currencies that is going on. We've already seen gold and silver spike in recent months as a result of markets pricing in this inflation. So imagine how much they will actually go up as the inflation sets in future years. We're actually in stagflation or deflation right now. So imagine what gold and silver will do when all this inflation finally hits and we potentially see hyperinflation. I mean, there's virtually no limit to how high gold and silver could go. And it's not because they're increasing in value, they're just a store of value. But it's essentially the amount of value that other fiat currencies are losing that could almost be unlimited. And now reason number 2 has to do with investors seeking safe haven assets. Currently, many investors are sitting on the sidelines in cash or investing in stock and bond markets. But imagine when this money needs a safe haven to wait out the inflation storm in cash. Ray Dalio has hinted at this upcoming inflation storm a lot in saying that cash is trash. And now I think the correct version of this right now would be cash will become trash, but you get the point. It's, in 10 years it will be worth a lot less than it is right now. You've all heard of supply and demand, and when demand increases and supply remains the same, the price will definitely increase. This is the second reason to be bullish on metals and miners coming up. Even though this will make mining much more profitable and the supply could increase because of this, it would increase because of this, there's always limited gold on the earth. If it were all mined, for example, it would fill an Olympic swimming pool. So it's limited in nature. It cannot be, made to infinity. So even though miners will expand operations and become more profitable, this does not mean that the supply increase will be sufficient to keep the price the same. Reason number 3 might sound insufficient, but is largely what is causing the current rally in the stock market, and is another thing I like to talk about on this channel, and that's crowd mentality, fear of missing out. Now, traditionally, when you mention investing in gold to your average investor, they might think of, oh, boring. In fact, I thought this when I first heard about gold and precious metals. Oh, this is just a way for older retired people to store value who don't want to, pay attention. They're just being lazy. But as the crowd observes metals and miners outperforming other equity markets and begin to buy into this, there's the strong potential for this to become similar to the run-up in the FAANG companies that we've seen over the last few years. It's simply just another fear of missing out market rally. Only this has the potential to capture much more than any of these companies, with investors seeking safe haven assets. There's only one gold, there's only one silver, whereas there were dozens of different hot tech companies or commodity different companies that this money was going into in the past. Whereas silver and gold is limited. It's not divided up into as many different outlets as this time. So I think it has much more potential to capture money than these companies did, with investors seeking safe haven assets from equity markets, stocks and bonds that I think are not going to perform well over the next few years. People don't want to miss out on the hottest new sector, and since there's a limited supply of these metals, this really has the potential to drive gold to unseen levels much higher than what it is today. So if you like these kinds of topics, just consider subscribing, and I hope to see you again.